Good morning, good afternoon. Welcome to E-mini Futures by Self. My name is Balasubramanian Iyer. The purpose of this video is to present to you a one-year backtest of the portfolio management software that we have developed, which outperforms Wall Street, Bay Street, and all the European streets out there. So, and one thing I want to point out, even though we started as a trading shop, and we have skill and talent not only in trading but in investing too. Most of our competitors are one-trick ponies, meaning they only know trading. But we are well-rounded and we have diverse talent and creativity, and we have skill both in trading and investing. And this video is all about investing or portfolio management and portfolio theory. Okay, so we certainly outperform our competition. And one of the main reasons for that is by background, I'm an accountant. I'm based in Canada. I've also done my certified, I'm a CPA from Texas, and I have a license to practice as a public accountant in the United States. Also worked at chief financial officers of public companies and private companies. So I have a strong background in corporate finance across the world. I worked for well-known companies like the Bosch Group, German groups. I worked under the Germans, and General Motors, Wipro Information Technology, a leading software group in India, and in TVS Group in India, another major information technology powerhouse. So all these work experience has helped me in my current avatar as a trader and portfolio management theorist. I don't want to call myself an expert or anything like that. I'm still learning. Okay. So before I go and demonstrate the 1 year, I'm going to give you several Excel sheets and 1 year backtest reports. By the way, right now I'll be able to show you the backtest reports for 1 year, actually more than 1 year, about 15 months. I'm working on developing it for about 10 to 15 years to prove that our portfolio management software is the best in the world. And you can get double the returns what the Wall Street and Bay Street and all the streets are offering. And I'll explain to you why with this do-it-yourself portfolio management you can get double return. One of the main reason is fees. Most people ignore the issue of fees. There are other reasons. Okay, so we'll address that. But before, now this is going to be a fairly long and a very interesting video, and we're not talking trading here. Okay, the first thing I want to highlight is, okay, if you go to stockcharts.com, it's a free website. By the way, it's a great website, and if you would like to sign up with them and become a member, you get some special tools, and I think it's a fantastic resource. And these guys, I don't know, whoever is behind stock charts, I think have done a wonderful job. They have a chart called as a performance chart. So here I'm showing you the performance of the US stock market. Normally you take SPY, and then TLT is the government of United States bond. This is government of United States federal paper. This is not junk bond. This is not private corporate thing. Okay. And these are the cumulative returns. So this is going to be a shocking thing to you. If you compare from July 2014 till now, you can see the TLT, which is the blue line, has outperformed the stock market. In fact, if you started here, you have achieved only 8% return so far in the stock market, whereas with the bonds, you have done 19%. By the way, even the some of the mutual funds and hedge funds will tell you why invest in the broad index. We have, there's active management and passive management. We have these active fund managers who are doing this, who are doing that. But even the best performing active fund manager did not achieve 19% in this period. Okay. What they did was, in one particular few months, they had a home run. They did 10%, 12% like that. But if you take their, cumulative return of the best performing fund manager, I'm talking active management. Okay. not index investing. You will see in Wall Street and Bay Street and all the streets, the best performer did not get what the investing in US government paper got you. And this is what is a shocking truth. In fact, you will be even more shocked if I tell you that in Canada, I went to a couple of financial planners and I went to some banks and other institutions and I asked them about TLT. And do you know that they don't know what TLT is? And these are people who are holding certified financial planning degrees, investment advisors, and they have no idea what TLT stands for. And they are offering you 5% and 6% returns, that too in hindsight. Many of these funds which they are managing have negative returns or a paltry 2-3%. The best performing funds that they carry in hindsight has 7-8%. Whereas if I had invested in the US government paper, I would have made double of that. So don't you think the time has come for you to give the marching orders to your financial planner and your investment advisor, all those who are sitting in the pretty offices in the banks, mutual funds, hedge funds, and all those institutions? They are projecting themselves to be pundits and geniuses when they are not. Okay, even the financial planning schools and the MBA classrooms, in my view, what they are teaching in the area of portfolio management is not only outdated, it is anachronistic. Okay, and this is really shocking. I mean, how many did all the television channels, all the business channels? In fact, it is even more shocking that in this period, okay, all of them were saying that you should sell bonds. The FOMC is going to increase the interest rates. Bonds are over. You should be selling bonds and investing in equities. And I'm not making this up. This is a fact. You can go and verify for yourself. In this period, that is in 2014, okay, in all this period, they were saying all along, every single day in all the television channels and all the business magazines, in all the MBA classrooms, in all the financial planning courses, that this is a period when rates are going up, you should sell the bonds and you should invest in equities. This is what these preachers, I call them preachers, all these preachers were preaching this for because they had a hidden agenda. They had a vested interest to collect fat fees. So when preachers preach you something, 99% of the time is because they have a vested interest and they have a hidden agenda. And you can see where are the preachers. The preachers are the red line. Okay. And if you were following these preachers, this is where you end up. In fact, you lost money in this period. Whereas if you had done your own homework, if you had done your own analysis, and if you had followed us at E-mini Futures Buy Sell, we would have told you that put your money in TLT, the US government federal paper, which is the most secure paper in the world, and you never lose money. And by the way, another thing they teach in the classroom and in the courses is that risk and return go in opposite direction. Meaning if they say that if you take more, if you're going for more return, then you have to take a bigger risk. They preach this philosophy as if this is a Bible in the, in the financial planning. This is what they teach. But reality is just the opposite. Actually, this is even more shocking. I mean, you see here, no one is going to argue with me that the US federal government paper is you are taking risk by investing in it. Definitely not. It's the safest investment in the world. Okay. So there, in fact, you increased your return by reducing your risk. As you invested more and more in TLT, your risk was going down and your returns were increasing, as this graph proves. And here, just the opposite happened in SPY. So you must be questioning. You see the fundamental flaw with all these financial planning and wealth management and portfolio theory courses taught in classrooms and MBA courses is they were designed in the 50s and the 60s when number one, the world was not globalized. Number two, buy and hold and hope for the best philosophy was preached, again, the word preaching, as a gospel truth. And so these courses were designed by people who were egoistic, okay, and egotistical, and they designed these courses to serve the financial services industry. And there was a lot of hidden agenda behind all these courses to sell you and make you Pavlovian in your reaction and brainwash you basically. So to generate these Pavlovian responses, they told you all these things. In fact, 95% of the financial planners and investment advisors, they don't know what TLT is. I'm telling you, I'm not joking. They have no idea what TLT is. And they have never looked at this chart in their entire career. Like even in the last 2 years, I'm challenging you, you go to their office and show them this chart and ask them to explain it. They can't explain it. They don't know what it is, what you're showing. Okay. So how come at some point they should have told you, listen, investing in TLT is better than SPY, right? And so this is really shocking, absolutely shocking. And let's now look at one more chart. Again, the same SPY TLT comparison. And here I'm taking from 2003 onwards, okay, a long term. And you can see investing in US government paper right from 2003 has been a winning strategy, okay, has clearly outperformed investing in the stock market. In other words, back in 2003, if you had invested in US federal government paper, you have beaten all the people who invested in the broad, either in the stocks or stock market. Here is why. First of all, if you had started in 2003, 90% of the people, when this market crash happened, they got out of the market. So they lost heavily. Point number one. Point number two, if you had started your investment into stock market, many individuals were not born in this period, correct? So they started earning salary, job, and had money, and they came into the market in this period. So they lost heavily, and assuming they were holding on to their investment, which did not happen. You know very well, in this market crash, 70-80% of the salaried class exited. Okay, so if at all, but let's take the best case scenario that they did. So you lost more than 100%. So when this market recovered, all you did was you were wiping out your losses. You didn't make any money. It's only from here you started making money. But that was not the case with TLT. TLT was pretty steady. So whichever way you slice it or dice it, it's very clear that if US federal government paper, you can not only is almost risk free, the returns are outperforming the stock market. Yet they are not telling you this fact. These facts are being hidden, and they are being hidden because they have a hidden agenda. You see, the global financial services industry is in billions, maybe in trillion, and they have a vested interest and a hidden agenda. And they are the people who are designing all the classroom courses too. So they're all interconnected. And the preachers, what they preach is also, there is a hidden agenda and a vested interest behind it. And if this is not proving it to you, I don't know how else I can prove it to you. Okay. Number one reason is fees. You see, the reason they are asking you to, they are not, if they tell you to invest in TLT, they are not going to make any money. Okay. They will be, all this entire financial services industry will come to a collapse and millions of people will be unemployed. So obviously they are going to keep this fact hidden. Okay. And they are only going to show you the red line because that's how they prosper. Number one. So fees, people say death and taxes, what about fees? People seem to forget fees. Okay. Second point, there is like another thing they keep preaching is buy and hold and hope for the best. Okay. Number two, they say that it's time in market timing. No one can do it. It's time in the market that is more important and not timing the market. Now this, you will hear this all the time. in from the pundits and the preachers. There is a reason why they are saying this, and that is because of the hidden agenda. Number one, they are preaching this because if they preach buy and hold, the financial services industry will blossom, which it has. Okay, that's and because of fees and all those things. Number one reason. Number two, when the ducks are quacking, give it to them. What do I mean by that? You see, human beings by nature are materialistic, and they have a long bias. Human beings have a long bias. They like to possess things. Human beings all over the world are not the people who will do dump, discard, and trash. In fact, if you look at the biology of a man and a woman, you will never come across a woman, well, I shouldn't use the word never, almost, who will use the word, the dump, discard, short, or, trash. These words are in the lexicon of a man. A man will use these words. A woman will never use these words. Very rare you will see a woman saying things like dump, discard, and all that. Notice it. It's because of the biological makeup of a woman. Number two, because and so in other words, if human beings all over the world have an inherent long bias, behavioral science proves it, and they like to possess things and they like to hold on to things. This have nothing to do talking about investing here. I'm talking about basic behavioral science. Therefore, it behooves the financial services industry to come up with a win-win formula. They also want this buy and hold and hope for the best philosophy, because that's how they become millionaires. And human beings have this behavioral instinct. So create a model and create a course curriculum which preaches this, right? So therefore, this has been told to people that you buy and hold and think long term. All these preaching is all dovetailed and interconnected with this vested interest. Okay, that's one reason. Second, somebody with common sense should ask the question: if I have to go long and make money on this way, this is what you tell me to do. Why is it that I cannot make money when the market comes down all this while? Why? Is that written in stone anywhere? Did Christ say that you can make money only on the long side and you cannot make money on the short side? Who said this? Human beings said this. Why did they do it? For their own agenda. They want to make money. And one more thing, another thing is they lack the talent or the skill to figure out that when the markets, so this is in hindsight, they will argue that okay, if we knew that markets are going to go down like this, we could have easily made money on this side, and therefore we can't predict or we can't do all this. We will come to know this only in hindsight, and that's why we are not doing it. That's what the answer they will give, which shows, by the way, that they lack talent and they lack skill. At E-mini Futures Buy Sell, we have a special software and we have the talent whereby our software gives and gave a sell signal in this area, and I can prove it to you in many different ways. We have a software which will tell you to sell here, not here, not here. And we did it in oil. I've got videos on YouTube to prove that. So this is where, so basically the fund industry in Wall Street and Bay Street and hedge fund, they don't use software for investing. You see what they are doing, if they had a software and if their software told them this is where you should be selling, then that problem is solved in the mutual fund industry. But unfortunately, that's not how they do investing. You see, they are not using software to predict, to time the entry and to time the exit. Like even in TLT, if you use a software and the software says give you a sell signal, see, even the software doesn't have to give a signal at the market top. Again, people confuse, we can pick tops and bottoms. I'm not talking about tops and bottoms. I'm talking about, let's say the software gives a sell signal here. You could have captured 2/3 of the move, right? Similarly, it gave here. You could have captured 2/3 of the move. So, but you need to have a software. If you don't have a software and some human being is preaching, sitting in an air-conditioned room and giving diktat and dogma, we are not talking about dogmas here, we're talking about software, okay? So like they were preaching all along this, do this and do that, market will go up, bond market will crash. This is dogma, one man's opinion, okay? We don't want that. We want software. We don't want dogmas. And there's a big issue here. Most of the preachers who are preaching are dogmatic and egoistic and egotistical. Because of that, they keep on parroting the same ideas and you keep losing money. And the best returns they give you is 6-7%. That's all. So you need to question them. Why can't I sell using a software, sell here and make money on the short side? Because if you do that, then your problems are all solved. All the time what they are telling is when the markets are down, you're going to lose money. Okay. And even if you take gold, for example, they will tell you you should invest 5% of your portfolio in gold as an investment. And that will protect you when markets are going down, and you should be long gold. They will preach you all the time to stay long gold, and which is complete junk theory, because I can prove it to you. Gold has been down. If you see gold, what did gold do? All the way from 1300, in fact from 1900, if I go back, this is only from January 2015, right? If you go back from to 2012 and 13, gold has fallen all the way from 1900 to 1100. But in all these period, okay, all these preachers were telling you to go long gold or stay long gold. You will see many of these preachers say you should have 5% of your portfolio allocated to gold and you should have gold in your portfolio. What they mean is you should be long gold. When they say you have to have gold in your portfolio, they are asking you to be long. They are not asking you to be short gold. But in this last 2 years, gold has fallen like Niagara Fall from 2000 to 1000. So when gold has fallen $1,000, why should I be long gold? Why is it that we don't question these things? Long back Voltaire and Rousseau said, man is born free, but everywhere he is in chains. This is particularly in North America and Canada. In United States, they are in chains even more. They are in chains even more. That is why, I mean, if gold is crashing, I mean, this is not a gold chart. If gold is coming down, why should I be long gold? That's not protecting me. I'm getting screwed in the bargain. Gold has collapsed from 2000 to 1000 and I should be long gold. What common sense is this? And if you are telling me that, and gold did not crash from 2000 to 1000 in 1 week, in 1 month, 1 day, or not even in 1 year. It has taken 2 years for that to happen. And it has been a steady fall, lower highs and lower lows. So why is it that these preachers are not coming on television and in the investment magazines and telling you short the crap out of gold? Gold is toilet paper. You should be selling gold, not going long gold. Why they are not preaching it? There is a hidden agenda, my friend. There is a hidden agenda and a vested interest behind all this. They want to suck fees from your pocket. If you are not understanding this, you are making a huge mistake. Huge mistake. I want you to go to this website and do all these things. Hopefully I opened your eyes, and this is indeed shocking. It is indeed shocking what you're seeing here, that the US government paper is outperforming the broad stock market in the last 1 year or even before, and these preachers are preaching you just the opposite. Okay, and this is all facts that I'm showing you. Okay, now let's get back to 1 year. Now I'm going to show you our do-it-yourself portfolio management software, and how in this video I'm going to show you the 1 year backtest reports. Okay, so this is from 2000. It's actually more than 1 year. It closes right now. Okay, so it's about 3 months. March has come to an end. So there are only how many ETFs? By the way, we don't, in our portfolio management theory, you don't have to invest in individual stocks. currencies and all those things. You are only investing in globally diversified ETFs. Number one. Number two, if any time you have to go short and you cannot go short the futures market, or you don't know how to use options, we've got a very simple formula. See, we have this, we have put together an ETF list where you can short particular instruments by going long. Okay, for example, if you want to go long oil and you don't know, you don't want to use the futures market, you can go long this ETF OLEM. And if you want to short crude oil, you know, oil dropped from $110 to like $44, right? So you can just go long SZO ETF and you get the same, more or less the same bang for the buck. Of course, if you're trading futures, you will get much more. But at least, you know, the salaried person does not know how to trade the futures market. The average salaried person does not know how to trade options. So I'm giving them a very simple solution. So for all the 6 ETFs, broad market that we are covering, we have got ETFs to short them. Okay. Second, if this do-it-yourself portfolio management, because there are only 6 ETFs, it's very easy to manage. Software tells you when to enter and when to exit. In other words, when to rebalance your portfolio. You create your portfolio the first time and you just rebalance. Everything is timed by the software, automated. No discretion, no emotions. Okay. And since there are only 6 ETFs, is easy. You can manage on a weekend. You can manage after dinner or supper time. Okay. Now let's go into, let's see what did the backtest reveal for S&P 500, which is SPY. The backtest shows that in 15 months you made a profit by just following our software, and this is for 1 year backtest. I'm working on 15 years. Okay. It shows you could have made 155 points. Okay. So 155, okay, points, right? So in this example, we are assuming that our starting balance in the beginning of 2014, and we're going to measure, I'm going to show you that by following our portfolio software, if you started with 300,000 in the beginning of 2014, now in March 2015, that is in 15 months, your portfolio balance is 700. That is, you not only doubled it, you made a return of 436,000. And this is a return of 145%. And what is the Wall Street and Bay Street and all those people who need to be given the marching orders? What are they giving you? 7%, 7%, 5%. And that to the best performing fund in hindsight. A lot of them gave you negative return, particularly if you invested in gold and precious metals and energy ETF, you got negative returns. And here I'm showing you, you can make 24%. And even if you take a very, I'll explain to you, even in the most conservative way of investing, even then with my software, you would have made 24%. And what are they giving you? 5%, 6%. Okay. And the reason, because one is fees, and second, they don't have a software, or they don't have the talent or the skill that is buy here, sell here, sell here, buy here, sell here. You need to have talent, and they lack. Wall Street lacks this skill, lacks this talent. That's the fundamental problem. Okay. Now, so you could have got 155 points. Okay. And with 100 and I've taken 300,000 as a starting balance. You divide 60,000 equally, so you get 300,000. So and 155 points, we all know in ES or S&P is $50 a point. Okay. And because you have $60,000, I've taken the futures market, but you know, and I'll show you how I've discounted it. And so with the overnight margin with 60,000, you can actually theoretically trade with a $6,000 10 contract futures contract. But I've cut that in half. I've taken only 5 contracts. Okay. So I've taken only 5 futures contract. So 5 futures contract multiplied by $50 per point, and according to the software, net you made 155 points. So that's how I got 38,750. Okay. Next, let's look at TLT. According to the software, you made $8. You know, this is not in points, this is a dollar. Okay. You made $8 cumulatively by investing in TLT. Okay. So let's go back. So we started with 60,000. So you can, with 60,000, how many units? So here you have to see how many units. So I've cut that into 400. I've taken it down and I've cut it some more. So I've taken only, though you could have invested 400, I've taken only 350 units. So 350 units times an $8 move, I've gone very conservative. So that's the return you make on this investment. Okay. That's about 5% rate of return. Next is oil. By the way, HYG is junk bonds. This is practically break even. So I didn't consider in this sheet, but I'll talk about HYG later on. This is crude oil. So crude oil, you could have made 50. Actually, this is 50 points or $50. Each $1 move in crude oil is $1,000. Okay, in the futures market. So you could have generated $50 worth of profit. That means with one futures contract. So 50 times 1,000. So $50,000 you could have made if you had invested in one futures contract of crude oil in the last 15 months. And if you had bought and sold as per the software's instructions, no human, no discretion. That is point to point. Sell here, buy here, sell here, buy here, like that. Okay, point to point. So if you have done that, okay. So according to this, 50 points, 1,000. Theoretically, you could have traded 10 futures contract. I've taken only 6 contract. So 50 points of $50 times 1,000 for each dollar move times 6 contracts that I can trade in the futures market. So that's $300,000. I'm going to discount all this because we know the salaried person cannot trade futures and options. So I'm coming to that. But I want to show you the theoretical potential, what you could have done, okay, if you knew, if you had the knowledge how to do it. So this is $300,000 was the money you could have made. And that's what I want to tell you. Did all these preachers come on television, did they tell you that you can go short oil and make money? All they are doing in television is going on talking about how oil is falling, how oil is falling, when will oil go up, when will oil go up, how oil. Why, have you ever wondered why they are not talking about how can you make money when oil is falling? Have you ever wondered? They never talk about that on television or magazines or in the financial planning courses. They only talk about how oil is crashing, why oil is crashing, when oil will recover, this is a buying opportunity. They only talk these things. No one talks about how can I profit from this fall in oil. They never talk about it. Point to be noted. Okay. Next, let's go to gold. So gold, according to the software, you could have made 175 points. Each dollar move in gold is $100. So 17,500. So using the same logic, 17,500, and then again for futures you could have traded 10 contract. We discount by 50% because we just want to make it conservative. We don't want people to say that. And by the way, we are not taking undue risks to achieve these returns. We are just going by the software. It's not some Ponzi schemes. We just increased the risk to achieve. And it's not true. I'm showing you the facts. Okay. So there is no risk involved. Okay. So I'm shorting the gold market 17,000 times 5, 87,000. And because see, if I'm using the software, if software gives me a sell, I sell. If software, when all gold goes up, so where is the risk? Like software told me to short gold here, and I did from 1210 to 1140. You calculate and multiply by $100. Then here on 19th of March, software said go long gold, and I went long gold. I'm making money on the long side. Where is the risk? Where is the risk? and I'm monitoring this, and the software will give me an exit. If suppose I'm long, and if I have to go short like here, the software is going to tell me when I'm back from when I'm sitting down for supper, right? So I'll ask the software, tell me what I should do. It'll tell you. It's going to tell you stay long gold. We are in a bullish move on gold right now. I'm making money. I made money this way. I'm making money on the long side. I made money on the short side, right? So it's not that we are taking undue risk, okay? So don't listen to the preachers. They are out to brainwash you, okay? Then EFA, this is emerging markets, European markets and all that for a diversified portfolio. According to this, you made $15 or 15-point move. So we go back to here. So in EFA, you could have bought 800 units. I discounted to 500. So 500 times, $14. So this is the return. So this is the total return in 15 months. So you can see with $300,000, okay, you could have increased it, okay, this portfolio, okay. Now this is the amount of return that you generated in 15 months. This is your starting balance. So this is the profit you achieved. So the cumulative balance, the closing balance is opening balance plus the profit you achieved in 15 months, and you got 700,000. Now, let's say that somebody is going to say, come on, this is all not possible, right? There's going to be all kinds of critics, armchair critics and devil's advocates. So let's say, and people can trade futures market and blah, 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 blah. So let's discount this by 50%. So let's say not 700,000, let's say 200,000, right? So even 200,000 is still, you know, you can see that's even if I take 200,000, that is 67%, right? So in 15 months, if I'm making 67% portfolio return, and I'm getting only 5%, a piddly 5-7% from this Wall Street and Bay Street and all the streets in the world, why will I waste my money with them, with those jokers out there? Why not I use the do-it-yourself portfolio management software from E-mini futures, buy, sell, and get this 60%? I don't want the 700,000. I don't want, let's say I'm taking not 400, even you take 100,000, even if you take 100,000, 100 on one, 3, so that's 33%. 33%. And mind you, you can do this every year. In fact, with our portfolio management software, in the year in which markets go down, okay, in the year in which markets go down, you will make more money with our software. Any professional trader or hedge fund manager will tell you that you make more money in shorting. You don't make more money by going long. Fear is more powerful than greed. Therefore, most of these professional smart money, they make a lot of money when markets are crashing, but they keep this as a hidden secret because they want to be rich. They don't want to share this secret with you. Then you will start becoming rich. So they keep this, so that this is for the preachers, for themselves. This is a preacher's secret weapon. They're not going to preach you. They will preach you the opposite. They will tell you to go long. When they are busy shorting in this period, they will be telling you, think long term. Don't think short term. Stay invested. Time in the market is more important than timing the market. This is what the preacher will preach you, while quietly, hypocritically, behind the scene, the preacher is shorting here all this while and making the moolah. Okay? This is what is going on, my friends. This is the naked truth. This is the naked truth, what's going on. Okay, so you can start with 300,000. Even if you make 100,000, you can see the amount of phenomenal returns. So now, this I have shown you. Now let me, in this 1 year backtest, my software also generates a lot of, actually you can make more money than this, and I want to show you just for the benefit of those who are interested in this. So this is a detailed Excel report. I can email to whoever you want. Now you will see there are 3 columns here. There is a profit and loss column. there is a MFE column, there is a MAE column. MFE means favorable excursion. MAE means adverse excursion. So what does it mean? You see this 155 points that I showed you, okay? And that gives about 7,750 with one contract, okay? This happens, and of course, we didn't take one contract, okay? We took 5 contracts, and that's why 7,700 multiplied by 5 is 38,000, okay? That's the math. Now, this is assuming you don't do any kind of proactive management. You blindly follow the software. Then you make only 7,000. But what this MFE or favorable excursion says, during this move, you had chances to make up to $75,000 profit. That means before the trade was closed, suppose there is a buy signal or a sell signal, if you have a buy signal and you go long, okay, you close your position when you have a sell signal. Until then you do nothing. That is if you're on the auto mode, robotic mode. But in this period, when you are long or short and the trade is going in your favor, many a time, let's say you went long and you closed your position with $1,000 profit. That is at the closing. But during this excursion, the same trade at one time had a $10,000 profit, but you didn't close it. You waited for the exit signal. Because of that, you got only $1,000. That's what this means. So during this move in 15 months in the SPY or in the stock market, you had a favorable excursion for $75,000. You had an adverse excursion too. So what we did here, we took the difference, because there will be times you'll be trapped in the adverse. So we took a difference and we multiplied, so that is 40,000, and we multiplied by 5 contracts. So even though in this Excel sheet I'm only showing that you could have made 38,000, in reality, if you are doing a little bit of proactive portfolio management, you had a chance to make up to $200,000 profit because of this favorable excursion. Now, even if you make half of it, 100,000, that's still better than 38,000, correct? So if we are managing the fund, if suppose if we form a corporate company and we have some professional fund managers and we do the management for you, this portfolio management, and we do this proactive management, then we can capture these favorable excursion. And instead of 38,000, we can make 100,000, okay? The 200,000 is a theoretical maximum. Nobody is a supercomputer to do that. So let's discount it by 50%. Okay. So by that logic, let's see. And also this shows you, by the way, that the favorable excursion is more than double the adverse excursion. What does that mean? That means that our portfolio management software is doing a fantastic job. We have a winning horse here. We have a winning software. That's what it means. Let's look at TLT. Same thing. The favorable excursion was $93, the adverse excursion was $34. We are only taking 8, but you could have gone for 93. So the same kind of math I'm doing, and it shows how much you could have made 20,000 extra. Okay. Next, look at oil. Oil, again, we took 50 points, one contract, right? But the favorable excursion was 130,000. The adverse, same kind of logic we have used. So difference between the two multiplied by 6 contract. Now this is revealing. What this is saying is, if you had used our software and did proactive management, in this 1 year, you could have made $500,000. I'm not joking. With an investment of $60,000 in crude oil. Okay. What was your initial capital that you invested? $60,000, right? So with $60,000 investment, you could have made $500,000 profit in this 1 year period, 15 months, not exactly 1 year, by doing proactive portfolio management. Because of this favorable excursion, this favorable excursion, netting the adverse excursion. This tells you that the software is very good. The portfolio management software we have developed is phenomenal. is doing a fantastic job. But in my presentation, I have not taken the favorable excursion in calculating profit. I have only taken automated, robotic way. Okay. Entry, exit, entry, exit, entry, exit, like that. Okay. You got me? Next, let's look at HYG. Remember in HYG, we said is break even when we ignored it. But in reality, even in the junk bond, HYG is junk bond. In junk bond, there was a favorable excursion for 17, adverse is this. So you could have made about $6,000, $5,000 profit times the number of units of ETF that you traded. This is per one unit of ETF, okay? Times, you have 100 units, then it is 60,000, 6,000, and 1,000 units, like that. You do the math. Okay, then let's look at gold. Gold, again the same thing. We took only one contract. Favorable excursion was 97 points. $1,000 profit, 40,000 for one contract. So we took again 57 difference between the two, multiplied by 5. So you could have made close to $300,000 profit. Okay, same kind of logic we have used. Again, EFA, the emerging markets. Favorable excursion was 31, adverse was only 5. We took the difference, multiplied by the number of units, 100 units, 1,000 units, those kind of things. Okay. So actually here the favorable excursion, the difference is very high, about 13,000 for one unit. So you can do the math, how many units and all those kind of things. So anyway, so let's get back to what our thesis. So our thesis is, by using the portfolio management software, and you are saving on fees, which is a big killer in the industry, in the financial services industry, because that's how they survive. Okay, that's their backbone, number one. Number two, they don't believe in for the average salaried person, they don't want you to go short the market. They always want you to go long and stay long all the time. Even if gold collapses from $2,000 to $100, they will still preach you that you should be long gold. You should have 5% gold in your portfolio, and you should be long gold. I don't mind having 5%, by the way, having 5% in my portfolio, as long as I'm going long and going short. See, where I have a problem is when they tell you should have 5%, but you should only go long. That's where there is an issue. Okay. So these kind of phenomenal returns, and this is not a phantom thing. This is not a Ponzi scheme. We're not increasing the risk. We're not doing any of that. How come these returns are coming? The answer is very, 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 very simple. We are using a software to tell us. For example, take this oil example. When oil was at 76, the software told me to sell oil, and it asked me to cover my short when oil was at 44. Why and what risk am I taking if I am in this period? Okay, 25th of November 2014, when oil was at $76, if I go to my short list, okay, and this is the ETF by Power Shares, SZO, okay, if I go long SZO, I'm going long. I'm not doing fancy margin trading. I'm not doing leveraging. I'm not doing options. I'm not doing double inverse ETFs. I'm not doing any of that. I'm not doing volatility decay. I'm not doing any of that. I just went long SZO. Power Share is a reputed, Barclays. These are all global names. I have nothing to fear. Okay. SZO will not become toilet paper. I went long. Okay. Because the software told me here. And the software is telling me to exit my SZO here. What is wrong? What risk am I taking and I'm achieving extraordinary returns? You can see the kind of returns I'm achieving because of that. You see the kind of returns I'm achieving because I'm doing this. You tell me, guys, what risk? This is not made of. This is not phantom. This is not pony thing I'm showing you. I'm showing you real stuff which they are hiding from you, these truthful facts. You're not increasing your risk at all. I'm going short. I'm covering my short here. What's wrong? And I'm checking my software. I run it every day. I don't have to sit and keep watching these markets. If I have to cover this short, I'll get an email. This software, you can get an email, when this position, short position, and you have this, you can get an email saying that cover your short. So from November 2014 till January, I don't have to do anything. I don't have to every day or every week or do any I'm not doing market timing here. They say that time in the market, not timing the market, all that crap they teach. Yeah, I am. This is time in the market, by the way. I'm not timing the market. Okay, I just went short. I am very cool, very sexy. I'm not doing anything. I'm not increasing my risk at all. But this is what the preachers don't want you to do. Did I not tell you? The preachers, they are preaching you when the market is down to stay long. Not They are telling you don't come out of your mutual fund, stay long, stay invested, while they are busy shorting and making money all this way. You see, the smart money, the professional hedge fund, they make a killing when these markets go down, but they keep that as a secret. That is a preacher's secret. Okay. So friends, I hope I opened your eyes. This chart should be more than revealing to you what is wrong with Wall Street, what is wrong with Bay Street, what is wrong with financial planning courses and textbooks, what is wrong with this industry. They are preaching you all the wrong things. And if this is not an eye-opener and you still want to believe them, you don't want to give them the marching orders, I mean, God only can help you. Hopefully, I kindled your thoughts. I made you aware of what are the issues going on in the world. Uh, you know, Even if you don't believe what I'm saying, at least go to this website and do this kind of analysis and see for yourself. I mean, this is in this 1 year. The blue line, friends, is U.S. government paper. The red line is the stock market. This is where and in this period they were preaching you the opposite. At least this should open your eyes. This should open your eyes what's going on. Okay, I rest my case. God bless you all. Bye for now.